Dow is down about 27. The Nasdaq is off 18 with just about 4 minutes for the closing bell and the countdown. Bob Pisani live at the New York Stock Exchange, where CNBC is first from the floor. Also joining us today, Hugh Johnson, Chairman and Chief Investment Officer for Johnson Ellington Advisors. Nice to have you both here. Bob, quickly, what happened here? We were down almost 100 points. We've come back very handsomely.
We've come back in the last few minutes, and I haven't gotten a lot of I've been on the floor just checking with people here. We've got a little bit of move in the S&P futures that I think is the main thing here. People are picking up stocks a little bit from the bottom, but I'll tell you, the topic today is Richard Fisher again. This guy's got quite a colorful Federal Reserve career. Yeah. If anything he's said in the last few days is any indication of where he's going to be going in the future.
Hugh Johnson, what do you think of today's market action, and overall, what do you think of the market here?
Well, if you take a look at the last 3 trading days, you have to be a little worried. I think there's a message coming from the markets collectively, Ted, and that is that the earnings season that we're about to start next Monday or next week is not going to be that good an earnings season. And I think investors are taking their cue from a lot of individual companies that have warned us more than we've ordinarily seen in the last 2 or 3 quarters. So message is a little bit worrisome on a short-term basis.
Hugh, let me just ask you something. Richard Fisher, and I hate to bring his name up again here, but the Dow's down about 270 points this week. Of that, I can directly trace 170 of those points to Richard Fisher. He dropped the market, the Dow, 100 points, 130 on Tuesday to the close. And then again today, the minute he made those comments and reiterated what he said, the market dropped another roughly 70 points here. Richard Fisher, in fact, 170 points of the downside on the Dow is clearly attributable to him, and that's inflation concerns, not necessarily earnings issues.
And it's not just Richard Fisher. There are other officials that have said it as well. They're stating pretty clearly that the Fed's going to raise interest rates both at their November and December meetings. If that happens, we're going to see long-term interest rates heading higher. And if that happens, obviously it's going to be very difficult for this stock market to make much more headway. When long-term rates get to 4.8% on a 10-year Treasury, up from the current level of 4.35, it's going to get very tough to see any further move to the upside in this bull market, in my judgment.
Hugh, let me ask you then about October. Traditionally, September is the worst month, right, but October has had, as we know, it's been punctuated by some nasty sell-offs. Do you think we see that this October?
I don't think it's going to be as bad as some of those historic sell-offs like 1987 or 1989, but I think there's going to be downward pressure, Ted, and I think largely because the problem is that the earnings reports, expectations are too high. Companies are telling us that those expectations are too high. Yeah. The earnings season is going to be a rough one.
Hey, Hugh, I was out with one of these big hedge funds the other night for dinner, famous hedge fund. I said, what do you think is going to happen in the fourth quarter? He said, we're positioning ourselves to get back in a bit. I said, why? He said, because the fourth quarter, traditionally we should see a rally. Traders are flat. They want the markets to move up. I said, is this your brilliant idea? The brilliant hedge fund that all we're relying on is the usual fourth quarter seasonal rally? Are we going to get that rally?
We'll get it in November and December.
A Santa Claus rally and a January effect. We have to start throwing those around. Hugh, real quickly, asset allocation here for the conservative investor?
Yeah, I'm still at the high end. In other words, 35 to 65% should be your range. You should be somewhere between 55 and 65% in equities. The bull market has further to go, but we might have rough sledding near term.
All right, Hugh Johnson, thank you for joining us. Chairman, Chief Investment Officer, Johnson Ellington Advisors. Time to close this market. Albert Fried Jr. ringing the closing bell at the New York Stock Exchange to celebrate his 50th anniversary as an NYSE member. And the NASDAQ also being closed out today by Peter Case, Executive VP, Chief Financial Officer and Treasurer at Ashworth. It is 4 o'clock straight up. More closing bell with Maria.
From the world leader in business news, this is the Closing Bell. Brought to you by Mass Mutual Financial Group. Live at CNBC's global headquarters, Maria Bartiromo.
Good afternoon. A reversal on Wall Street in the final 15 minutes of trading as the Dow comes back from another inflation talk-laced decline. Today, the worries were fueled by new and reinforced comments from Dallas Fed President Richard Fisher that the Fed would stay focused on inflation, and that means further rate hikes. The comment sending the market down for the 4th day in a row. Meanwhile, GE raising its profit forecast for the year. CEO Jeff Immelt saying he is bullish on the U.S. economy. Despite continuing volatility in energy prices, today crude oil at a 2-month low, down again, 4th day in a row. Here's how the major indices are settling today. As I mentioned, the Dow was down at its worst nearly 100 points, and it ended down 32 points on the session. The Dow Industrials tonight at 10,286. NASDAQ Composite also down 19 points at 2,083. And the S&P 500 today off of the worst levels with a decline of 5 points. Meanwhile, the drumbeat continued on in the inflation front today. For the second time this week, Dallas Fed Reserve President Richard Fisher turned the market on its ear with a warning. Here's that warning, quote, readings on core inflation have been within the acceptable range of 1 to 2%, but they are edging closer to the upper edge of the Fed's tolerance zone, with little inclination to go in the other direction. More perspective now from Cnbc senior economic reporter Steve Leisman, Bob Pisani at the New York Stock Exchange, and Tony Crescenzi, chief bond market strategist at Miller Tabak. First, Steve, over to you. Did these